Welcome back. Atlas Mara Limited, the African investment vehicle of former Barclays boss Bob Diamond, says Fairfax Africa now holds 42% of the company after it subscribed to 70.1 million new shares. The change in ownership comes after Atlas Mara announced plans in June to raise $200 million so that it could increase its stake in Union Bank of Nigeria and scale up other businesses. Fairfax subscribed to around 80% of Atlas Mara's share issue, with existing shareholders taking the rest. Fairfax Africa is part of Canadian investment firm Fairfax Financial, led by Prem Watsa, to invest in African assets. Diamond teamed up with Africa-based entrepreneur Ashish Taka to set up Atlas Mara, a vehicle through which they planned to buy up assets to help build it into a powerful force in African banking. And Kenya's annual inflation rose to 8.04% this month from 7.47% in July. Now, the rate rose above the government's preferred band of 2.5 to 2.7% earlier in the year after a regional drought caused prices to surge. It peaked at 11.7% in May but had dropped in June and July as the return of rain improved food supplies. The higher rate of inflation in August was attributed to an increase of 1.04% in the food and non-alcoholic drinks index compared with July. Now, we're still looking at the market's reactions to the annulled Kenya's elections. I'm being joined now by the Managing Director, the Africa Report, Nicholas Nobrook. Good afternoon, Nicholas. Thank you very much for coming through to us.
Good afternoon.
Now, talk to us about market sentiments before, during, and of course after electoral victory of incumbent Kenya's President Uhuru Kenyatta.
Well, it's worth saying that in 2016, last year, the Nairobi Stock Exchange was doing relatively badly. And it's only since March this year that we've seen a steady uptick, but it has been almost unbroken since March, rising Nairobi Stock Exchange. We've had new infrastructure deals signed, the new Chinese rail line between Mombasa and the capital, Nairobi. So, it has been going relatively well. Kenya has always managed to tap the international bond market when it's needed to, even though people say some of that money is going to repay old debts. And the reaction to the actual the election, the initial election of President Kenyatta, this re-election that everyone thought was done and dusted before the judges overturned so dramatically the results this morning. The markets greeted it, relatively optimistically, in the sense that markets like it when it's business as usual, and a new administration will always bring a certain level of disruption with all the new nominations and such like.
Now, we've seen global investors' immediate reactions today to the election. Cancellation, Kenya dollar bonds fell, the shilling is currently under pressure. What does this say?
Well, I imagine we'll see a lot of that. We heard talk that the Nairobi Stock Exchange was falling dramatically, that they've had to have a halt in trading. Whether or not that plays out is yet to be seen. But I expect what will really happen is, there'll be a wait-and-see attitude adopted, and really how both President Kenyatta and Odinga play the next few weeks will be crucial for investors. If either one of them decide to take a slightly more violent approach, that will be bad news not only for them, but obviously the country, and investor perceptions can quickly turn.
All right, now, what about the likely impact of this election cancellation with Kenya's closely tied regional economies? We have Tanzania, Uganda, Ethiopia.
Well, I think it's generally going to be business as usual, again, with the proviso that, if this doesn't turn ugly over the next few weeks, then it will be business as usual. It's worth remembering that 5 years ago, in Kenyan elections, which turned very violent, there were cases of railway lines being ripped up and regional trade really suffered. I don't expect us to see anything like that this time.
And what are the expected market reactions between now and the new poll date? That's November 1st.
Well, I mean, we have to remain optimistic for now. I think, you know, the broader question will be, does this have a long-term impact on the way investors see Kenya? And forgive me for repeating what I've said on Twitter, but history does show that strong institutions lead to strong markets. And if you can trust the courts with these big decisions, then you can trust them on serious investment decisions, and that tends to have very, very good long-term implications. You know, there are a lot of investors in Africa who want to get money in and out as quickly as possible. There isn't enough patient capital, and this kind of strong institutional response is exactly the kind of thing which will get long-term money into the continent.
Now, looking at all of this, what is your outlook for Kenya's economy?
Well, they are expected to have a slowdown this year. Last year, they grew at about 5.8%. They've suffered from various droughts. They've suffered from inflation. They do have a very good team in the Treasury. So, as long as they don't mess with the fundamentals, they should be okay. And they do have some big infrastructure deals in the pipeline, which are going to provide much more power, much more connectivity. I would certainly back the Kenyan economy.
All right. Thank you very much for your time, Nicholas.
Thank you.
Nicholas Newbrook is the managing editor of the Africa Report. We'll move on now to Egypt, where foreign borrowing and direct investment helped drive that economy up 4.9% year on year in the fourth quarter of its 2016-2017 fiscal year. It compared with a 2.3% year-on-year rise in gross domestic product in the fourth quarter a year ago. The fiscal year runs until the end of June. Egypt last November signed a $12 billion three-year International Monetary Fund loan agreement tied to sweeping economic reforms such as tax hikes and subsidy cuts that the government hopes will lure back foreign investors who fled after the 2011 uprising. Foreign direct investment in the 2016-2017 fiscal year jumped 27.5% from a year earlier. Egypt's foreign debt, meanwhile, rose 38.4% to $73.9 billion at the end of March 2017, up from $53.4 billion in March 2016. And that's a wrap on the program today and, of course, for the week. Thank you very much for watching. Have a beautiful weekend.